Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Welcome back. I'm Sarah Larby. You are listening to Where Should I Invest? Today's guest is Jesse Bobrowski from Calvert Home Mortgage. And I will say, if you guys are flipping or doing the BRRRR strategy out there, you are going to want to listen to this because access to money is not as difficult as it is. And Calvert actually lends a lot of money out if you're in Ontario or Alberta, and you are going to want to listen to this podcast. But just a little bit of background, Jesse began his real estate investing adventure about 14 years ago after graduating from university. He moved to Alberta from Ontario, and he met a husband and wife team of private lenders, ended up working with them and learned a lot, learned the ropes. And now he's at Calvert, and Calvert loans out a lot of money to investors. And I've had a few people I know specifically work with Calvert, and they have different programs. But I would say this is private money. This is not bank money. It's not super cheap, but it makes sense for the right deals. And so they really focus on the flip deals and the BRRRR deals. And I hope you guys enjoy this podcast because it is definitely very insightful. Like I say in a lot of my podcasts, money is not the hardest thing to find. And today I want to at least provide some of that access to you to reach out to Jesse at Calvert Home Mortgage and start that process of opening the doors to have access to more funds, to do more deals. So I hope you guys enjoy today's podcast. And if you haven't left, please leave a rating and review. I really appreciate it. And let's bring on Jesse. Jesse, welcome to the show. How are you?
Sarah, doing well. Thank you. And thank you for having us.
I'm excited to have you speak. You're coming in and speaking from an investor standpoint, but also from Calvert Home Mortgage Investments Corp. And I think it's a great opportunity for people that are looking for flips or to BRRRR to be able to utilize some of the private funds that you have access to. But before we get started, just out of curiosity, how did you get into what you do today and real estate investments in general?
Oh, awesome question. So I started my endeavor into real estate and real estate investing. I guess it would be 13 years ago, coming on 14. I had moved to Calgary as a university graduate from Ontario during the boom years in oil and gas. Looking to work as a trader with a larger oil and gas company here in Calgary. Started that career, was going great, and met a husband and wife who were doing private mortgage lending. They were doing more of syndicated model, not a fund like Calvert have. Their names are Mark and Diane Pullen, and met them, learned about their business, started working for them more on a part-time consulting basis, and 4 months later, I found myself working for them full time. This was during the beginning of the subprime crisis, so the world financial crisis back in 08, 09. So I cut my teeth learning during a big downturn. And what was great about it is I learned a lot about what not to do when investing in real estate and when lending in real estate.
It's definitely a great time to start, right? And it is important that you, and especially because of what you're doing today, and we'll get into that, but that you know the different cycles and what can happen in the ups and then in the downs. And I don't know if we'll have something like 08 and 09 ever again to that extent, but there are market cycles, and we have to be aware of those before we start borrowing funds, and we've got to have those exit strategies. So how long have you been now working for Calvert Home Mortgage, and what's your role there?
So my role is Vice President of Business Development, and I've been working with Calvert for the last 5.5 years. Dean and Dale, my bosses and partners, brought me on 5.5 years ago, and things have been going really great. So my role as the Vice President of Business Development is essentially, from a very high level, ensuring that we have a lot of awesome deals to lend on and real estate investors and borrowers to work with, as well as ensuring we have sufficient capital to lend.
All right. So you're bringing the pieces together, the deals and the money together. So, I think that's great. One of the things that I say often is that money is not as hard to get as financing. Money is not as hard to get as really awesome, great deals, especially in a market like we have today, where, sellers are holding offers and there's multiple offers on everything. So Jesse, what makes Calvert Home Mortgage different than, other private lenders out in Canada?
So what Calvert does, what we do, is we really focus on short-term residential lending. And we don't stray too far out of that. And when it comes to short-term, we really love working with real estate investors. We love to support them on their BRRRR and flip strategy specifically. We also do some construction, but it's really that flip and BRRRR stuff that we love. So we take time to understand their business, understand their goals and objectives, and really create tools to support them where banks can't, because banks don't love lending on short term. Even if you're a AAA client, if you're doing flips and working through, 5-10 properties a year, quickly the banks are going to realize that they're not profitable from those loans and cut you off.
You're going to get red flagged from those banks.
You're going to get red flagged. Yes. Yeah. They do not want that business. And then even other privates, a lot of them, BRRRR and flip clients, their problems are unique, and it takes a lot of work to understand how they make money and how they're profitable. And we've been doing this for 35 years. We understand it intimately. We're experts in it. So we support BRRRR and flip clients by a few very unique ways. One is that we have a flip program that we offer in Ontario and Alberta, where you can buy with as little as $20,000 down. So literally, you can buy a property in Ontario where you're buying it for $500,000 and your down payment is 20. We're lending you $480 plus the fees. So that is a program that really doesn't exist across most private lending platforms. And we really like to promote that. And now that's all predicated on, of course, you, the investor, the flipper, the BRRRR client, having a successful project. So if we deem you to be making real money, we want to support you on that. So that's one real unique part of what we do. Now, in that, we've built tools to better support flippers than really what exists out there in the market. So one real tangible way is we do our own valuations. So we do not require, nor do we want, third-party values. We will ask you for your budget. We will ask you for your renovation costs. We will pull data from MLS and comparables and do a valuation based on the as-complete value of that property to confirm what that value is. But most importantly, to confirm what the value is, back out all your expenses, and to confirm profitability. So we do our own values, which really shrinks the time in which it enables us to make a decision. So because we do our own values and because we can do those same day, I can give you an unconditional commitment letter same day. I don't know of any banks nor privates that are able to offer that. We're also saving you some cost. And another unique component of what we do is we do our own legal administration. So this is unique to other privates. All the banks do it, right? The banks do their own legal administration. They instruct your lawyer, and your lawyer will act on behalf of both the bank and yourself in order to close the deal. Whereas it's especially prominent in Ontario, there needs to be 2 lawyers involved, and that's a law society requirement. We've worked with our lawyers who've confirmed with the law society that we are considered an institutional lender. We've invested in our legal administration and are able to use 1 lawyer. So with that, again, we save you time and we save you money. We recognize and understand that in a market, especially like a market like what's happening in Ontario, that in order to get the deal, in order to get the best price, you may need to act quick. You may need to go in unconditional and close in 10 days. Because we have our own legal admin and our own valuations, we can accommodate that. So those are two real tangible ways that we're different. A few others, like I discussed, we really focus on your profitability. We're not going to do a deal where we don't see you, the real estate investor, being profitable.
And I think that's good, because at the end of the day, this is not cheap money, and we can get into that, in a bit. But for just 20K down, you're going to be paying a little bit in interest, a little bit more. So you do want to be in and out of these deals fairly quickly, and you want to make sure that you do have that exit, right? So it sounds like you're really catering to flippers and to people doing the BRRRR strategy that can show, here's the ARV, here's the cost of the renos. You guys can take a quick look and ensure that person is going to be able to exit that deal, whether it's selling it or going to like a Streetwise mortgage, person there, whether it's Dahlia or somebody from her team, to be able to refinance that out. So it is important. So do you have somebody that takes a look at that on your end, just to say this is not profitable, how you're still going to have money left in the deal that you're still going to owe us? Like, how does that all work?
Yes, yeah, we have a tool going into the uniquenesses of us. Is we have a tool that we refer to as our flip analyzer. This is an interactive spreadsheet in which the investor can run their numbers. And really all they need is a few variables to enter. They need to know their purchase price. They need to know what their renovation budget is. They need to know how long it's going to take them. And then we'll work with them to come up with what the ARV is. And then based on that, they plug those, sorry, Sarah, they also have to know how much money they're going to put down. And you can play around with those numbers, and based on that, it'll spit out your profitability. So each underwriter on our team who the investor would work with is experienced in real estate lending. They're experienced in real estate lending. They've seen hundreds of these. They've done, in some instances, they've done them on their own personally. So they know this inside and out. They will help you run those numbers. They will provide you the tool to run those numbers. And based on that, and based on we like to consult with our investors to ensure their profitability. So yeah, we have experts on our team and tools that we will provide to whoever wants them to really dial in and ensure their profitability.
All right, that's awesome. And you also mentioned quick closing. I mean, and that's important, right? Sometimes you've got a wholesale deal that, it's a wholesale partially because the seller needs to sell very quickly for whatever reason. And a lot of, like, if it's a 10-day close or whatever it is, a lot of lenders are not that fast, especially nowadays. You can't really go to an institutional lender and say, I'm closing in 10 days, surprise. Like, they're not going to get it done in time. And especially not during the pandemic, they're quite backed up. So having a solution like Calvert or what you guys are doing, I think is great, because you've got an option, right? So, it could be the property's red flagged, it's not going to get financed. It could be the property's a flip and you're not going to get bank financing because banks don't like flips. It could be the quick close. All these different options is just so important. And you guys listening to this, it's important to have other options, and especially private lenders on your side, so that you can close and you can close in a short amount of time. So it's good that you said, you're able to essentially fund the deal. It sounds like 24 hours, give or take. Yeah.
Basically as fast as the lawyers can work. So if we have all the information in from the client, we can commit same day. We've done deals where we've committed in an hour and a half. Then it's up to the lawyers to get through their work. So a big benefit in working with us is we've eliminated half of that work as it relates to lawyers. We now have one lawyer that's working really on behalf of both of us, but most importantly, to get the deal done. So at the moment, we've engaged 6 different firms who understand us and know what we do, and understand, more importantly, as you had just said, Sarah, the necessity to be able to work at the speed of business. So deal may come in, we may not fund it for 3 weeks. Deal may come in and it may be an off-market deal where you were able to lock it up at a good price because of the fact that you can close next week. So we have lawyers that can work at the speed of your business. And yeah, we've done deals already in Ontario in 48 hours. We've done deals in Alberta in literally 3 hours. So we have the team, we have the process to achieve speed.
And it sounds like right now Alberta and Ontario is where you're lending. Is that correct?
Yeah, that's correct. We are currently only lending in Alberta and Ontario. We recently entered Ontario, would have been July of 2020. Things are going amazing. There is a lot of opportunity for flip and burr clients there. We're supporting them. There's a number of big players who have validated what we're doing, and a lot of awesome flip and burr clients who are borrowing from us. So yes, at the moment, it is just Alberta and Ontario in which we're lending.
All right. And in terms of like how big your pockets are in terms of lending, like, you know, do you have enough money? Like if all of a sudden 100 people contacted you and they had 100 deals, like, you know, is there a limit to how much you guys can loan out? I don't know if that's something you're able to share or not. I mean, you don't have to if it's private.
No, it is. It's an awesome question. And I think that's, again, something that sets us apart is that we have the infrastructure and the support of our shareholders and our bank to get to whatever number is necessary. So unlike other privates, our money is in a fund. We're making the decision. We're not relying on third parties to raise money. We're not relying on Uncle Joe to approve the deal. It's our decision in-house. At the moment, we are very well capitalized. We have bank leverage that they would love for us to use more of. So there'd be no issue with us calling on the bank for more capital there. And we've been blessed to provide our shareholders with great returns over the last 39 years. And when called upon, we can very quickly and relatively easily raise the money. So we would love to be challenged to where we're saying we're out of money, but I don't think we don't see that in the near or distant future.
All right, so that's good, and it sounds like, you know, you mentioned 39 years, so it sounds like people are saying, hey, can you make my money work and utilize my money to get me a return? Essentially, you take it, you're that middle person in a way. You take that money and then you invest into a deal. Is that kind of how it works?
Yeah, pretty much. So we're a mortgage investment corporation, as defined through the Income Tax Act in Canada. And what we do is we operate a fund. So investors buy shares in Calvert. And then throughout the year, we earn money through interest and fees. And at the end of every year, we return all of that to our shareholders net of expenses. So overhead, all of our amazing staff, expenses in relation to setting up these mortgages. And yeah, we then return that in the form of interest income to our shareholders. So a lot of our shareholders own us in RSPs, TFSAs, and cash. And that's exactly the idea, is passive income through mortgage lending, where we plan to provide the best return possible. Our internal goals are to provide an 8 to 10% return every year.
All right, for those loaning out their money.
For those investing in us, yes.
Got it. Okay, so you're in Ontario, you're in Alberta. Are there any types of properties you will not loan on? It sounds like a lot of these are, you know, residential, but maybe just walk us through what you do like to loan on and then maybe what you don't like to loan on. Yeah,
perfect. So we love average homes in urban areas. So our bread and butter is, you know, your $500,000 to $600,000 home in Kitchener-Waterloo, Guelph, your $800,000 to $900,000 home in the GTA. So average homes in urban areas is what we love. We define urban as 20,000, a population of 20,000 or over. So deals where you're looking to borrow against properties of those nature, we're in. As you get outside of that, we'll still look at it. We want to entertain it. We want to support you if there's a deal there. We just get more conservative. So, you know, when you're talking a multi-million-dollar house, it's tougher for us to lend on. And the reason is there's more risk from our perspective. There's less buyers for that house. There's less data on that house. There's fewer comparables. It's harder for us to value. So for that reason, as a lending institution, we look at that saying, there's more risk here than there is your average house. Same as in terms of rural areas. The more rural you get, the more risk there is, because the less data there is, the fewer buyers there are. So we want to support our flippers and bird clients as much as possible, but they need to understand our bread and butter is those average homes in urban centers. We do some multifamily. 4 to 8 houses is kind of what we consider multifamily. We don't really want to get into the true commercial loans. There are lenders out there who better understand that. We've been successful in being experts in what we do and sticking to our knitting, so to speak. So when we see deals that are outside of our realm, we know what lenders are in those markets, and we're happy to refer it. We also know awesome brokers, like you mentioned with Streetwise, who we can say, hey, you know what? This doesn't make sense for us. Why don't you go talk to Dahlia or whoever it may be? Mm-hmm. So we're very keen on knowing what we can and can't do. And we're very keen on letting our borrowers or giving solutions to our borrowers even when we can't do it.
Okay. No, that sounds like a fair, a fair thing. You might as well stick to what works well. And, if it's something different, then there's definitely other options for, if you've got a commercial, or I'm guessing land development falls into that kind of stuff as well, where it's probably not your bread and butter. Is that
correct?
So deal aside, let's just say the deal makes sense. What do you look for in a borrower perspective? Like, are you looking for, have they been bankrupt, or credit? Like, what are some of the things that you need to do as your check?
So the thing that we focus most on, and we've hit on it a number of times here, is the borrower's profitability. So if the borrower is going to be profitable based on the numbers we want in, and we will forgive bruised credit or low credit or previous bankruptcies, as long as there's rationale. What we won't do is, like, if the credit is clearly negligent and there's a lack of care there, we don't want to work with clients of those nature. But if it's, we've lent to clients with 500 credit scores because there was an issue. Not all credit scores are created equal. We want to know the story behind that. So it's important for our borrowers to have integrity, but we get that sometimes things happen and credit score doesn't reflect integrity. So as long as there's a story behind it, same as serviceability. We don't base our serviceability standards on your typical GDS, TDS ratios. Because we're in and out so quickly, like usually, it's 2, 3, 4, 5, 6 months where we're in, you're renovating, you're stabilizing rents, and you're refinancing. We don't get hung up on long-term serviceability. We want to see that the borrower has the money or the cash flow to service our mortgage for those 3, 4, 5, 6 months. And we use a make sense approach. So as long as we can see it on paper, or there's a joint venture, or there's a line of credit, or we can even blanket other homes or other rentals that our borrowers own to give them more cash to do that. So we want to get creative and find solutions. And GDS TDOs ratios from our standpoint are not providing solutions.
Mm-hmm. Yep. Okay. No, that sounds good. Sounds like you basically will accept, most people, provided that the deal makes sense itself. And you're like, there is an exit and we can see the profitability.
And we can see that they're going to be able to execute. You may not be a tradesperson, but are you hiring right? Have you thought through all these variables? So again, going back to our experience and our expertise, we vet the client to ensure that the borrower is going to succeed.
So somebody listening to this right now, should they be contacting you before they need the money, or once they have a deal? Like, what do you recommend? Like, are you looking to start those relationships now? Let them know, okay, go ahead and go shopping. Like, it sounds like you've got a good plan in place, or just come to us when you've got a deal in place? The
sooner the better, Sarah. So obviously investing in life moves fast, and you may not be able to get all your ducks in a row up front, but our pre-approval process is super easy. It's a one-page application. We want to see your last year NOA only to ensure that you've paid your taxes, and we will pull your credit. So with those 3 pieces of information, we can pre-approve you and say, go shopping. Here's your, let us know how much cash you have available or how much debt you have available to do this. And we can kind of prepare you for what your max purchase price is and your max renovation is. But the better you plan, the more proactive we are, the better the experience is going to be. So the pre-approval process takes 5 minutes of reviewing your file and, half an hour of interviewing and understanding who you are and what you do. And then it's a matter of now you're set up and prepared to execute on those purchases. So we much prefer to have it pre-approved, but we don't mind rushing through things last minute either.
All right. Sounds good. I mean, somebody listening to this, if they are looking and they're going to be, either a little bit short on cash or, they're maybe looking for something that's out of the box where an institutional lender might not lend on it. It's always important to have that backup. So I'm glad that you mentioned that. So, at this point in time, are you able to share some of the options you have? I know you talked about like the 20K down and we show you that we have the reno money essentially, but like what other options are there for like, I don't really want to do the 20K down. Maybe that rates, is a little bit higher, or like what other options are there than just that?
Yeah. So we do have a number of options. I'll say though, that a lot of our flippers do love the 20 grand down because it enables them to do volume, right? Like even the companies or the guys and gals that are doing, 10 plus a year, they love it because they don't want to lose out on the next deal, because the next deal might net them 50 grand, whereas trying to save, 2, 3, 4, 5 grand on interest rate, that just doesn't make sense to their business. But again, if you do want a lower rate, we're happy to allow you to buy our risk down. So the more money you put down, the lower our rate goes. We go to our least expensive money is 7.9%, and that would be at a purchase at a down payment of at least 25%. But we also can get really creative. Like a lot of these flippers and BRRRR clients, especially BRRRR clients, are already going to have a portfolio of properties they own. And if there's equity in those properties that they're not going to have the bank's leverage, we could tap into that equity. So we can do what's referred to as a blanket mortgage, where okay, let's blanket this property over here that Sarah owns, and it's worth 500 grand, and she owes CIBC 300, and we'll consider that to take that up to 75 or even higher. So we'll give you credit 75% or higher. So in that example of 50 and you only owe 300, we'll give you credit of 75 grand. So we can consider that put towards your down payment. We can even give you money to do the renos. So the more we work with each other and understand your situation, the better we can provide solutions to get that rate down. Our goal is to always put our best foot forward for the clients, and we want to do that on every deal.
Yeah, and it sounds like you're consulting as well, right? It's not like you're just wanting to give them the money, but you're making sure that like they understand, okay, here's what we're estimating the ARV is going to be. Here's what we're estimating is probably fair in terms of reno budget, reno costs. Like, so it's nice to hear that you're going to be able to like handhold them a little bit for the newer investors, to make sure that they're not getting themselves way over their head. Cause that's always a concern, right? With private money lenders, you think of these movies where like somebody loaned money to someone, now they're like trying to break their knees or something. But, I think this is just in the movies, but I think that's the important part, is that you're actually working with them and like ensuring that they're not going to be stuck, with private money, and they're going to have an exit at some point. I think that's just really important to keep mentioning.
Yes, so true. Like we care so much for our clients and their profitability, because our goal is not to do one deal with you. Our goal is to do the next 10, 20, 30, 40, 50 deals with you. And if you're not going to be profitable, you're probably going to give up on this type of real estate investing. Our goal, Sarah, is the borrower's profitability. And if we don't see it, we're going to recommend they pass and find the next best deal.
Cool. That's good. Awesome. So the next part of the podcast, Jesse, is the lightning round. I'm going to ask you a series of 5 questions. You're going to give me the first answer that comes to mind. And keep in mind, everybody actually gets these 5 questions. So I don't change them up unless somebody's been on the show for like 3 or 4 times already.
I should have done my homework.
All right. You ready to play?
You bet.
Okay. Question number 1. What is your favorite real estate investing book?
You know what? My favorite investing book, I'll go with, is probably Snowball by Warren Buffett.
Okay.
And the big learning there, and it applies to real estate. So the big learning there is the importance of being in the market, not trying to time the market, compounding that investment, compounding those returns, and sticking to the plan, and really, really doing your due diligence and becoming the expert in what you're investing in.
All right. Sounds like a good book. Number 2, I don't know if you are a podcast listener, and this doesn't have to be real estate or investing, but do you have a favorite podcast?
I do. I'm a big fan of Joe Rogan. I love his podcast. I love his guests. I don't always agree with his opinions, but he shoots straight, which I love about him.
Awesome. Question number 3, Jesse, what do you do for fun aside from working and anything real estate related?
I am addicted to skiing. So I'm blessed to live in Calgary, Alberta, and have a lot of amazing ski hills and backcountry within a very close distance. I didn't ski at all before I moved out here, and I am completely addicted. I try to do it whenever possible.
All right. And question number 4, if you lost all of your money, all of your assets tomorrow, how would you start again?
I would start again the same way I got here, which is hard work, treating people right. What goes around comes around. And if you're busting your butt and you're treating people right and doing right by people, the opportunities will come.
All right. Great answer. And question number 5, you can take this in any direction that you want. If somebody has $50,000 and they want to get started, how would you recommend they spend that money?
$50,000. Well, this is going to be a bit self-serving. So I would recommend you build a great team around you of realtors, mortgage brokers, experts like Sarah, and figure out a strategy that makes most sense for you. For us, it's flipping and burring. And with that 50 grand, you can buy a house with us for 500 with only 20 grand down, which leaves you 30 grand to do some renos and stabilize rents, and then work with a great broker to get you refinanced or even just sell it on the market. So with the 50 grand, I invite you to create a great team of experts, work with those experts to figure out what plan works best, and then use all the tools at your disposal to execute the plan and make as much money and have fun doing it as possible.
Awesome. Thanks for playing the lightning round, Jesse. Where can people reach out if they wanted to know more about Calvert, yourself? Where can they go?
So few places. Our website is awesome. We have a lot of great tools. It is simply www.chmic.ca. You can follow Calvert Home Mortgage on Instagram, Calvert Home Mortgage. You can follow us on Facebook, Calvert Home Mortgage, and email. Email me at Jesse, Jesse, at chmic.ca.
Awesome. And if you're listening to this, just mention that you heard Jesse through this podcast, and Jesse is going to make sure that you're well taken care of.
Amazing.
Awesome. Any final last words of advice?
I just want to thank you for having me and Calvert on here, Sarah. And I want to thank you for your dedication to the real estate investment industry. It's experts and people like you which build up the investment world and really provide value and provide great opportunities to businesses like us to work with amazing clients. So my advice is, again, hard work, creating that awesome team, finding those awesome people that you want to work with to see you succeed and have fun.
Awesome. Thanks so much, Jesse, for being on Where Should I Invest? It was a pleasure having you on. And thanks for being able to bring solutions to us that we may not have, going through the typical lender or the typical bank. So thanks very much for everything you do.
Thank you, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?